Hey traders, how's it going? I hope you all are doing great. So my agenda for this video is to recap two of my trades. I'm going to break it down step by step, and I'm also going to use these trades to explain how is it that I trade exactly, how do I read price, how I anticipate price moves, and what's my model, what's my strategy, and how I engage with the markets for my setups. Now, before starting this, I do want to preface this by saying that I trade ICT concepts, I trade smart money concepts, and I do not claim authorship of these terminologies. So anything that you hear me say in terms of PDAs or order blocks, fair value gaps, all of these are ICT concepts. And uh, I've studied from him, huge respect to him, and he's my mentor. Now, there's a common misconception about ICT that ICT is a specific strategy, but that's not true. What ICT is basically a set of tools, like an arsenal, handed to you, and you can use it however you want in the markets, however you like it. You can design it to fit your personality, to fit your time schedule, and however you want it. There is no one size fits all. So enough talk about that. Let's get into the video. Now, so first things first, I want to know what the higher time frame chart is up to. So basically a top-down analysis of what exactly is it that price is doing. Starting from the monthly chart, what do we have? We see that price is currently trading off a fair value gap here, okay? 50% of that wick, 50% of that wick, that is a fair value gap. It's a different type of fair value gap. It's not the ones that you see. This is also a fair value gap. The one here, but this is a different one. So if you're new to ICT or smart money concepts, to understand the PDAs, I recommend that you watch ICT's YouTube channel, Code Content Month 4, where he talks about all the PDAs. And of course, I'm going to be amplifying on those PDAs. Every time I talk about a PDA, I'm going to give you a little explanation on it so that you actually see how it works and how we can put it to use in live markets. So we see that price is trading off of this. It has respected it. Okay. We did not close. We did not close below it. We did not close below that. Okay. We just wicked into it. We rejected higher, and it looks like we're reaching up higher. Now, listen to this. All price does is trade from PDA to PDA, okay? It's either from discount to premium or premium to discount, okay? This is literally all that price does. We see that it has respected this, and it's trading higher. Do you see any premium arrays here until we reach this rejection block, okay? And we have this previous month high, but in terms of this monthly chart, that is not a high. A high is the candle, which has a lower high on its right and a lower high on its left. So this is a high, a monthly high, but this is a previous month high, but on the monthly chart, it's not a high. Okay, so from this, we already have a monthly bias. Okay, long term, we're moving higher. But that doesn't mean you drop to the 1 minute time frame and you start buying, because there's going to be a lot of retracements. Okay, that's why we have all these time frames, and there's a time frame hierarchy that I'm going to be showing you. But at least we have an overall long-term picture. Okay. Now, we also have a nested weekly rejection block, so it's a pretty good draw on liquidity. We also have these equal highs here. So our long-term bias is bullish here. That's very good. What are nested PDAs? Lower time frame PDAs that are nested within higher time frame PDAs, okay? So when we have huge higher time frame PDAs like this one here, okay? The weekly rejection block. Let's say that we're trading into it. We don't know what exactly are we targeting? Okay, there's this entire range. It could go here, it could go here, it could go to 50% of this. But nested PDAs, what it helps you do is it refines a specific key level inside a higher time frame PDA. Okay, here the nested PDA is this auto block here. Okay, let's see if we have something on the 4-hour chart. Yep, we do have this auto block here. That's a nested PDA. So when we're looking, this is also a nested PDA, by the way, so that just so you don't think that I'm cherry picking this one because price traded there. But when we see more examples, I'll show you how exactly nested PDAs are helpful for us in the trades that I took today. But here, inside this, okay, inside this weekly rejection block, this nested PDA, the 4-hour fair value gap, this would be my first target, okay? Now, if price shows willingness to trade inside it again, this order block would be my next draw on liquidity. Let's say that price did not break above all this, but after this candle, it gave me confirmations to trade lower. In that case, let's say that if price broke structure lower, not on the 4-hour chart, but on the 15-minute chart, in that case, I would be targeting this. Okay. So this is how you use nested PDAs to navigate inside these huge weekly or daily or 4-hour PDAs. Let's get rid of that. Okay. So we were talking about the monthly chart, the weekly chart, the bias higher, but overall, if you see that we're in a consolidated, a ranging market, okay, we're not anticipating breakout above this until it's obvious. Now, on the daily chart, at this point, I did not have a bias on the daily chart on Friday, okay? The daily chart was not clear to me because what we did was we ran this high and then we traded lower. We closed below this fair value gap because if I was going to look for continuations higher, I would have liked to see price wick into this and continue higher, but we didn't get that. What we did get, however, is we traded into this volume imbalance. And just so you know, I was not looking for price to trade into this and reject higher. I was just watching price and it started doing it. Okay. So price trades into this. I was waiting here on Friday looking for a trade. And I see that price is trading up higher. Okay. We're trading off a discount array. And the next premium array that I see is this rejection block up higher. Okay. Why is this a discount array? Fair value gaps or volume imbalances are real support and resistance levels. Okay. So it doesn't have to be this one. Okay. This is also a valid support level. Okay. And by the way, you see that? That is not random. You see how price respects the body. Sorry, do you see how price respects that discount end of this fair value gap and does not close below that with its body? It just wicks below it. That's not random. And I did not see that before, by the way. I've just marked it out, and that is absolutely beautiful. When I see price trading off of this, my eyes directly went to this rejection block. Okay, let's drop down another time frame. I'm going to keep this here. Taking a look at the 1-hour chart, this is where I'm going to stress on the importance of nested PD arrays. Okay, that's a daily rejection block. I've marked out 2 fair value gaps within um, this daily rejection block, and I've also marked out this 4-hour rejection block. Now, I know that some of you might be overwhelmed and this all might be too much for you, but over time, if you keep watching my videos, if you take notes, if you practice this in the charts, you're going to get better at it. Okay. I promise you. I'm not going to promise you profitability because a big part of that comes down to your psychology when you're trading live. So, but I do promise that over time, you're going to get better at reading price action and anticipating moves in the market. Now, we have trend line liquidity here. Okay. Like equal highs, equal lows, trend line liquidity, all these are high probability liquidity pools. And here, what we saw was price ran this liquidity here, okay, and it gave this rejection on the 1-hour chart. Now, what do we have here? Price runs this 1-hour low, okay, and it's trading up higher. Where is the next hourly 1-hour premium array? Okay, it's not this because there's no high yet. This one was already ran here, okay, so it's not that. This auto block was used here, so it's not that either. So the next premium array that you see is this one. Okay. So coming to this trade that I took here, once price traded into this hourly fair value gap, once price traded into a daily rejection block, because at this point it was inside the daily rejection block. Okay. Before I go into that, I'm gonna teach you guys a little. Oh, where's the? I'm gonna give you guys a little educational content here. Okay. Let's say that we have a 4-hour PDA right here. Okay. Let's say that this is a 4-hour auto block. 4-hour high, okay? And let's say that there's a weekly fair value gap here, okay? The first thing that I want to talk about here is time frame hierarchy. So what this essentially is that when price is trading from a specific time frame's PDA from discount to premium, what is the equivalent lower time frame that you would use to look for market structure shifts and to look for entries? Okay. So when you see that price has traded into a 4-hour order block, okay, and assuming this is a 15-minute time frame, okay, and price gives you this break in market structure, it's as long as the overall narrative in price is bullish, once price breaks structure here, this is a high probability trade on the 15-minute chart, okay, to go up higher. So you would either enter on this sell stop run, or once price breaks the structure, or once it gives you another structure break and then you enter from here. All of this are valid depending on what style you're trading. But if these were daily PDRAs, then this time frame would be hourly. Okay, if these were 1 hour PDRAs, you would look for 5-minute market structure shift to confirm that price is trading from there. Now, the highest probability trade in this portion would be when price is really close to the drop, because then it's very obvious that price is going to trade there. Okay. But at this point, it is still high probability once price breaks market structure. But let's say that the overall market condition is it's ranging. Okay. In that case, it need not reach up into this 4-hour high. Okay. So this was one thing. The second thing I want to talk about is once price trades into this 4-hour high, okay. Now, trading is all about probabilities. Okay. Whatever I teach here, it is more likely to happen. It does not mean that that's what's going to happen every single time. Okay, but that's what's more likely and more probable. Okay, so let's say that this was a daily fair value gap. Okay, and here's a daily order block. And we have the 1 hour chart trading into this daily fair value gap, and there's another weekly PDRA. In this example, it's a fair value gap up here. Now, the thing with PDRAs is that every single PDRA, now again, ideal markets, high probability. Okay. When price trades into a specific time frame's PDRA, let's say that it's a daily, okay, in order for it to break through it, we need a retracement to a 4-hour PDRA. Okay. This is ideal market condition. Now, if price was in a hurry to get up there, and let's say because nothing's black and white in trading. You should know that. There's always gray areas and you have to adjust to the market condition. So let's say that maybe the 4-hour PD array is somewhere here, okay? And maybe this is a little close, and this would be too deep of a retracement. So price instead uses a 15 or an hourly PD array from here, okay? Now, in that case, I trade it a little differently, okay? I look for maybe if this is a 15-minute PD array, okay? I look for another smaller nested 15-minute PD right here. So that would be my little trade from 15-minute using 1-minute structure. That would be my first profit target, after which I put my stop to break even. So that's a different way to trade it, okay? But generally, you want to look for retracements when price trades into a specific. If this was a 15-minute PD, right, price would retrace back to a 5-minute or a 1-minute, okay? But in order to break through it, the ideal way would be, if it's a monthly, then it would be a weekly retracement. If it trades into a daily, it would be a 4-hour retracement. Okay. Similarly, that's how it works here. So essentially, what I did in my first trade was price traded into a daily rejection block. Okay. Now think of it. When price trades into a daily rejection block, a daily PD array, we expect a retracement to a 4-hour PD array. Okay. A retracement to a 5-minute PD array is way higher probability than a retracement to a 4-hour PD array. Okay. Why is that? assuming price was in a hurry to go up there, don't you think the highest probability retracement would be to an extremely low time frame PDRA? Yes or no? Okay, let me show you the trade that I took. So once price trades into that, okay, what did price do here? It retraced all the way back to this 15-minute fair value gap, okay, and then continued higher. What I tried to take was when price traded into that, my eyes caught this fair value gap here, okay? That was my initial target. So I'm going to be posting the execution on Twitter so that you guys can see it. That was my first profit target, after which I put my stop to break even. Let me show you the entry. So this was the entry. And my entry model is basically an inversion, an inverse fair value gap. Okay. The reason why the reason why I trade inversions is because, as I said before, fair value gaps are real support and resistance levels. So when look at this level here, okay, I'll show you what makes an IFVG higher in probability. You see how many rejections it has on this before breaking through it? That is powerful. Okay, so this is basically resistance, sorry, support turned resistance here. Okay, and my draw on liquidity, the first draw, this was basically a scalp. Okay, that was my first draw. That was sort of like a 1 hour trade there, but I took off like 50% here, and then I let the rest of it run until it reached the 15-minute fair value gap. So that was the first trade. So far, we've talked about time frame hierarchy. So what would be the time frame? So what would be the time frame where you'd frame the PDRA to PDRA move, and what would be the lower time frame in which you'd look for market structure shifts and to get along with order flow. The second thing we talked about, no, actually, I think it was the first thing, which was the PDRA theory, where I said that price moves from PDRA to PDRA. And the third thing is the entry model here, the IFVG. Now let's go to the other entry that I took here. This one was on a 5-minute chart. I don't think we need this. Okay. So we're inside this. So we're inside this daily rejection block. Okay. We trade up here, 1 hour fair value gap. We trace back to this 15-minute, break through it, go up into this, go up into this fair value gap. But here we've done something interesting. Price did retrace back to a 15-minute PDRA to break through it, but what it also did was it retraced back to an hourly fair value gap. That is higher in probability than a retracement to a 15-minute PDRA. Now, when I see this, let me just remove that lipstick for now. Now, this 4 hour rejection block is the nested PDRA within this. Okay, so if you see that price broke through this and broke through this, so the next obvious draw is the rejection block on the 4 hour chart, which is here. Okay, so as soon as I see that, what did I say? When price is really close to a PDRA, that is the highest probability time to take the trade. And at the same time, we had a retracement to an hourly fair value gap. So that made it extremely high probability. So, so if you see in terms of PDRA to PDRA move, we first trade into this, okay, retrace back to an hourly. And the next draw, because we've already broken through this, the next one is this little fair value gap here, which is also nested with the 4 hour rejection block. So this PDRA to PDRA move is high probability. Okay, let me put that back. Yep, that's where we have it. Now, at this point, I mean, the technicals here were clean enough, but what made it even higher in probability was this stop hunt. You see that? A manipulation, a liquidity hunt in the opposite direction of your bias is adds a major confluence to your setup. Okay. And to make it even better, we had this inversion completely closed. So that was a beautiful setup. This was not in kill zone, it was like 20 minutes before the kill zone. But I'll be posting the execution of this on my Twitter handle. I actually entered in pretty late, somewhere probably around here, because I wasn't on the charts. I just saw this all of a sudden and I had to get on it because the technicals were too beautiful. So that was the second trade that I took. Now, I know that for some of you traders, especially the new ones that have just started trading, this entire video might have been extremely overwhelming. But over time, by watching the recaps and by watching how I navigate price, I'm going to post every trade that I take. I'm going to be posting the wins, the losses, what not to do, and you will attain this level of understanding of price action where you'll be able to do all this yourself and take trades. And the beautiful thing about this PDA, trading with PDAs, is that when the markets are choppy, the PDAs are not going to be clean, and it would indicate trapped order flow. And we will get into this topic later in another video where I'll be showing you my losses. But that's the beautiful thing about it because it helps you stay away from bad market conditions when you can't have a read on which PDA is price trading off of, which PDA is it most likely to reach into. Okay. Now, if you're new to ICT concepts, I would suggest you watch Core Content Month 4, like I mentioned before, in which he talks about the PDAs. And and I'd also suggest you to go through the 2022 mentorship of ICT to reinforce the concepts. But most importantly, what I want you to do is go into the charts yourself, mark it up the way I've shown it to you. Even better if you tape read. So tape reading means sitting in a kill zone, not taking any entries, but reading price, anticipating price moves, marking out the PDRAs, and marking out the levels where you think price would trade to, and just watch price unfold. That's all for this video. So I would appreciate if you could comment down below on what you want me to talk about, if there's a specific concept that you struggle to understand, or if there's a specific concept that you want me to go in depth into, I would do that. For now, it's going to be trade recaps until I get any specific requests, and I will make a video on that. So that's it for now, and until next time, be safe.